Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. So we're traveling for Thanksgiving, folks. Please be safe. This quote is by Andrew Gide. Be faithful to what exists nowhere but into yourself. Market-wise, let's take a look at it out here. We have the Dow Industrials down 15, Nasdaq up 20, S&P's flat. Gold contract flat at $11.96.90 an ounce. Silver down a penny at $16.53 an ounce. Platinum up $5 at $1,229 an ounce. Copper $2.96 a pound. Light sweet crude down 30 cents, trading at $73.79 a barrel. Bonds, the ever-ready bond market, folks, just won't stop. 10-year up 6 ticks at 127.10. 30-year up 13 at 143.12. The 30-year, folks, got into the bar of the high volume spike on October 15th yesterday, continued into it today, bringing up the 10-year simultaneously. You're going to see the October 15th highs get hit, and the real question is, what is going to force the bonds up there to hit those highs? October 15th, that's when the 30-year moved 3 points in like 10 minutes. Bottom line, I expect what you're going to see is the market pull back. Divergence is all over the place out here. King dollar down 287 ticks, trading out at 87.67. King dollar, what did King dollar do? King dollar this week got to 88.51 on a continuous contract. 88.80 was the high that it's been going after for quite a while now of 2010. More than likely, we'll go through that, but more than likely, I suspect that King dollar, that was the test, and you're going to see King dollar not only backing down, I suspect next week we'll probably get some volume on the way down. Gold, what do we have with gold? Gold is at 11.96. And gold is building cause, folks, to break out through 1202. And what's really neat, I can tell you, I was listening to just CNBC about an hour ago, and it was just really pretty wild. They had one chart guy on, another fundamental guy in the gold market, and guess what? They were both saying, no, sell gold right here, right now. That was music to my ears. Euro up 37 ticks, trading at 125.11. Yen down 24 at 117.75. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, we're at 2070. You're coming into the Thanksgiving holiday week. Markets closed tomorrow. Going to be light volume today. Friday, folks, what I expect you're going to see on Friday, the high of even yesterday is going to get tested again. We're at 2074.21, and one of the largest days I've ever actually seen in the market, meaning they can push the market wherever they want to push it on Friday, was, I believe, in 1994 and 93. And it's a half a day. Bottom line is that the market just went topside in an incredible way. It didn't matter what you bought, it went up. That was at the end of a huge run, and what ended up happening that following Monday is that the market not only gave that back, but it gave that back probably double the amount. So bottom line, what I expect you're going to see on Friday is that they'll push these markets up to the highs. There'll be no juice. We'll have, coming into next week, first couple of days, you have the window dressing, but bottom line is, and when we go through this, I do expect what you're going to see is some kind of pullback next week. Dow Industrials. What do we have with the Dow? Dow Industrials out here trading out of the 801, 17,801. That little baby more than likely is going to spike up into the 894 level. That's the high that was generated last Friday. NASDAQ Composite. Inside the composite, what you have is that the composite at a higher high. Composite has been edging up each and every day. You know, volume isn't there, but bottom line, each time you go to a higher high, close at a higher high, you can go higher. If we do the correlation inside the SPY, what you have with the SPY out here today is doing 36 million shares. And the spike of last Friday, you had 142. That's going to get hit. That high is 207.84. We hit 207.52 today. I expect that little baby will get hit tomorrow. The 3Qs, the NDX 100. We take a look at the NDX 100. That's done 13 million shares today. You get a higher high. Just so you can really wrap your head around this, the NDX 100 at these highs should be doing about 50 million. So yes, it's bleeding up. Bottom line, I expect even Friday it'll bleed more. Small caps. Now this is where this is going to get interesting. If we look at the IWM for the small caps, what you have is this. Yesterday you got into the swing point from November 13th, as well as the swing point from last Monday, which was the 21st, and both of those you failed on. You were coming into that swing point with 26 million shares. Now, what you're also doing is you come into the lows of the high in the Russell 2000. The Russell 2000, folks, is the only major indice that hasn't reached its high yet. Now, the low of the high in July 1st was 119.20. The high is 120.97. What we did yesterday is that we got to 118.78. I suspect what we're also going to see Friday is that it's going to go up there and tap the low of the high and fail once again. So we'll see where that shakes out. But that context of where the small caps are and the type of tests they do are really crucial. Gold. Let's go to the gold contract. Okay, what do we have with gold? What you have with gold is this. Gold is ready to take off. We've come off the bottom with strength. We've had 3 separate signs of strength, counting the low of itself of November 7th. It's building cause to get up and over 1202. 1202 is the number on this contract. We came up to 1207.60 on the 21st, and then it closed out at 1197. We did that, however, with some nice volume. So we've been building cause to get up over this level. I do expect we're going to get up and over that level. Why? Because inside the XAU and the HUI, those indices yet haven't overtaken their downdraft from October 30th. But what has happened is you had 3 or 4 other gold, 1 silver stock that has just taken apart that downdraft of the 30th. Okay, came into the 30th, cut right through it, has the volume, had the price spread, all of the above. They're the leaders right now. That's the beginning to get through that downdraft. We go over to the silver market. We take a look at silver. What silver did yesterday was pretty cool. It's to start edging higher. Silver's now refusing to back off. And silver has a long way to catch up, folks, okay? Silver has to first get over the 1720 area. We're at 1653. Silver is a lot more volatile, though. So that's on the way up and on the way down. Yesterday, silver had a nice day. Not a lot of price movement, but what you had, we had 71,000 contracts in the silver market. That's a good number. We're going to need more than that. We're going to need about 85, 90,000. That's what I'd like to see. But it's always nice seeing heavy volume coming into a swing point. Now, let's go to the bond market. And see, the correlation here, folks, this bond market, well, the bond market with the correlation of the dollar coming back is screaming that something is on the horizon, that these bonds are just going to spike higher once again. So 10-year bond right now, we're doing 1.3 million contracts out here today, which is, by the way, which is huge for the day before Thanksgiving. Yesterday, though, we did 2.7 million contracts. We're at 127.10. So the 10-year now has got into the low of the spike high, and that's saying the probability goes much higher, that you're going to go right into 130.17. The real key is what is going to push these bonds up into that level. The 30-year is already, 30-year has been leading the bond market, period. It's not only into it, it's into it in a much larger way, meaning that the low of the high in the 30-year is 142.13. We're up a full point now, 143.11. We did the volume characteristic yesterday. It did 884,000 contracts. Bottom line, that 30 is going to 148. And you want to ask yourself, how and why is that going to 148? 848. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials flat, Nasdaq's up 22, S&Ps are up 2.5. And folks, don't forget, every trading day we do live programming from 8 o'clock in the morning to 6 in the afternoon. We take that and replay it, of course, and you can get all that programming right on your cell phone. The way you do it, just go TFNN.mobi. That'll get you the audio portion of it. If you want to get the Tiger TV, which is the video plus the audio, go to TFNN.com on your phone. You'll see it on the top right-hand side. You're going to get the audio as well as the video. Now, when you're over there in the next couple days, folks, what you want to do is right on the front carousel. What you're going to see, it says free webinar with John Logan when you test drive the TAS profile scanner. Right now, this is going to be, first off, this, folks, is an outstanding piece of software. What it does specifically, it scans all markets, gives you multiple time frames. You can test drive this absolutely free. Inside the test drive, what you're also going to get is this. On December 9th, John is going to be doing subscriber events. And the only way you can get into it, and it's free, is be a subscriber. So check it out on the front page of TFNN, and what you're going to see is this, okay? There's a couple videos. Once you pull up that page, go through the videos, because what you're going to be able to see is that whether you're looking at sectors or equities or currencies or commodities, indices across the world, if you want to go across the world, on a daily basis, on a weekly basis, on a monthly basis, it's a profile scanner, and it gives you the profiles. And specifically what the profiles are is that where the buying points are, pressure points, and where the selling points are, pressure points in the marketplace. What it's phenomenal at doing is doing that work very quickly, very efficiently, and what it also does, okay, which is just amazing, it will give you market breadth on a continual basis. I mean, I'm talking about all day long. So there's a lot of neat tools that are inside this. Right now, folks, about the only folks that are using it is they're paying a fortune through Bloomberg. You know, this is a tool that is John has put on the Bloomberg service. John kicks us off at TFNN every trading day, 8 o'clock in the morning. He's allowed TFNN subscribers and listeners to use it, okay? It's an amazing tool. Go test drive it. It costs you nothing to test drive it. That's the bottom line. 877-927-6648. Okay, now, let's go over, you know, we went through the Dow, NASDAQ, S&P, small caps, gold, bonds. Bond market, folks, is screaming it wants higher price. You have the 10-year right now yielding a 2.2. That's going to basically... 2.2, that's going to keep 30-year mortgages at 3.9, 3.95. Nice take there. Now, let's go to King Dollar, because King Dollar, folks, has been trying to test the 88.80 mark, and it hit 88.51. What we have out here today is this. You back 282 ticks, then that's not a huge amount on the way down. What volume-wise is not that huge either. You're at 227,000 contracts. As we come down, the first test that I suspect we're going to get here is at 87.23. So that's 400 ticks from where we are. If we get an expansion of volume, that is going to set up a pullback. That's the way this is set up right now. So we'll see whether we get that expansion of volume. I do expect we're going to get it. Why? Because the correlation, this market, first off, has loved a stronger dollar. You know, the correlation has been direct for some time right now. Dollar up, market up. Dollar pulls back slightly, market will pull back slightly. But the dollar hasn't pulled back at all, not once, since May of 2014. Bottom line, you've gone higher. Okay, so you spike high on the continuous contract, it says 88.80. When you close, when the dollar closes, if in fact the dollar closes, under 87.24, that'll be a confirmation that the pullback is on. So, and we'll see where that pullback comes down to. What you want to remember is that currencies in particular, they trend for long periods of time. So we'll see where that whole baby does shake out. If we go over to the euro for a second, we take a look at the euro. And by the way, this can just be a natural pullback in a dollar that does want to go higher. The same with the euro. This could be a natural bounce and a euro that wants to go lower. The reason being is, folks, the euro has been trending down for 6 months. The dollar has been trending up. So a counter-trend bounce, what would change that dynamic, meaning is it a regular counter-trend bounce, or is that dollar staying in the same consolidation that it has been, and it won't be able to break out of that consolidation? Let's go, we'll look at this again. And so, because what you'd have here, if in fact that's the case, then you make the case that since 2008, we've been in this consolidation. You know, my take on it is that we're coming up to that high number one, and we came up to it with volume. So what that says is that this is going to be a pullback in a market that the dollar does want higher price. So we'll see where this whole thing shakes out. But what you can expect is a large pullback in the dollar. The reason it would be a large pullback, and that would be a natural pullback, is because the expansion was so dramatic. That's how this thing is set up right now. So it's going to be wild watching this whole thing shake out as to where it wants to go and what it means. Now, we're going to put the rest of it together with the oil market. And this is what's really positive for the gold market. Oil, folks, okay, has not only come down, but we've come down with some real juice. If we go over to this oil market right now, where's crude? Okay, so crude is down 0.4% today. Not a big deal, 35 cents. What you have, however, is this, is that you came down yesterday with volume. We did 290,000 contracts yesterday. Today, we've already done 240,000 contracts. You're going into a swing low that only has 152,000 contracts. That swing low is 73.22. We came to 73.30 today. Hugely dangerous. Why? Because what you have, folks, is that you're hitting the bottom of a trading range. In this case, the range is like the $73 level. And you're stopping right before it. And you're not only stopping right before it, you're stopping right before it before this OPEC meeting is taking place tomorrow. And bottom line, I expect no matter what they say, oil's going to $70. That's the way this is set up right now. That's the conservative estimate. The liberal estimate would be that you actually have an ABC structure that is almost that's 18 points on the way down, and that would get oil into the $60 level. So you're going to see some big action depending on what the OPEC says. Are they going to produce the same amount of oil? Are they going to produce less oil? You know, so we'll see where that whole thing shakes out. But the way the oil market is trading out here, it doesn't seem that no matter what they do, oil wants to go lower right now. This is Tom O'Brien. This is TFNN. Don't forget, folks, come over to our website at TFNN. You're going to be able to test drive the TAS Market Scanner right here, right now, absolutely zero cost, and get John's webinar absolutely free. That webinar is on December 9th. We're coming right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And, you know, if we go look at the drillers right now, folks, are just getting smoked. If we start with Diamond Offshore right now is down 10% at 381. And what you're going to see is this. Now, these have come down dramatically. In the last 6 months, where it comes down, this Diamond Offshore has come down from 48 to 32. But what you're going to see here is that it's going after a B point, and it has monster volume. So your A point is 48 on this. Your B is 32. Big numbers, 32, that's $18. Your C is 39, so you're going to end up, the first price target is $21. We bring this back and we put this on a monthly basis. What you're going to see, okay, so I got to bring it back even further. I got to bring it back 15 years. Whoa, baby, this is so dangerous. It's unbelievable. Okay, so the 2008 lows, folks, and Diamond Offshore is 38. It blows them away, okay? That is setting up, it's setting up a $23 target here. Rig, Transocean. You take a look at Transocean, what we have with Transocean. Transocean just down 10% also. Huge volume. Takes the B point out with volume. We bring this back, And what you're going to see, we'll bring this back 20 years. And, yeah, rig has taken everything out, including including the 2008 low, and we already have more volume. So 268, 289 million, no, 338. It had less volume. It had so it had 289 million versus the swing low of 08 of 338. Bottom line, you know, you get rig, we're at 23 right now. It's going to break 23. Man, rig's going down to like $10. And just so you keep in mind, these large riggers, okay, can basically get destroyed, not just get down to $10. The boom and bust, we haven't seen one for a while, but the boom and bust in that business is absolutely incredible, meaning that they gear up, the rigs cost a fortune, they rent them for a fortune, and when all of a sudden there's too much oil, guess what? Those rents go to zero. Let's go to John in New York. Hey, John, what's going on?
Hey, Tom. Thanks for taking my call.
Sure. How you been, man?
Good.
Good.
I'd like to buy UGAZ. What price do you suggest?
Okay, so this is UGAZ. This is the Velocity shares, 3 times long natural gas. The low for this for the year has been $10. The high is $42. Now, the way these leveraged products work, folks, okay, they compound on the way up. They contract on the way down in a dramatic way, both ways, okay? And they're daily investment vehicles. When we take a look at this, well, what we'll first do is this. We're going to go over to the gas market first. We just had a commodity expert from TFNN, Andy Hecht. He's in the den right now talking about gas. And right now, what we did have with gas is that you had the numbers come out this morning. Bottom line is that what was amazing is that the gas future market pulled back, but the bottom line, the drawdown was big. There's no two ways about that. So we're at 4.35 in the natural gas market and the future market. The volume characteristic out here is light. You know, it's in like a little consolidation. So natural gas itself, particularly coming into natural gas, I think, we're at 430, go to 420. This is building cause, however, to go all the way up to 502. So if we go back to the UGAZ that John wants to buy, we take a look at this UGAZ. What I would do, John, is this. First off, I wouldn't be buying anything today or Friday. Wait till next week. And I think you're going to have a good shot at getting this is at 15, 13. I think what you want to see is actually a rejection of 1392. Where I'm going with that, John, is I'm going of the high of the last swing low here, which is on the 14th. That's the way I'd trade that baby out. You get that. Longer term, see, this thing wants to go up to this $28 level. But because of the way that leveraged ETFs trade, there's no, you cannot just stay in this thing, man. You got to look for a trend. You know what I'm saying?
Yes.
Yeah. So, and watch, I'll show you this, folks. If you want to see, I'm going to go from here right back to the futures again. If you want to see this UGAZ, okay, has basically traded in between 1390 and 1875 very, very quickly. So I can see why he wants to trade it, that's for sure. Have you traded it before, John?
Yes, I have made some money on it.
Yeah, no, I can see, because if you get it right, I can see 13 to 18 in 3 days is a cool deal. Yeah, that's the way to do it, because it's going right along with, the natural gas, the actual futures, man. That's the way I trade it out.
Thanks, and have a happy Thanksgiving.
Thank you so much, man. You have a happy Thanksgiving also. And as you're out there, folks, and I guess it's pretty cool, because I know in the Northeast they were expecting, 3 to 4 inches of snow. Most of that is rain, thank God. Be safe out there when you're driving, folks. That's the real bottom line. Silver, let's go over and take a look at that. Well, yeah, XAU and HUI first. We take a look at the XAU first. What do you have with the XAU? We're at 74.49. The XAU right now is over the downdraft of the 30th. That's a big number, folks, okay, because XAU yesterday also was pushing in and over that number with volume. We did 35 million shares going into 45 million. It needs more volume, but that's a good start. You're over it. That's the bottom line. That's the XAU. We go look at the HUI. That's the Gold Bugs Index. Gold Bugs Index right now is at 177.54, and Gold Bugs Index also pushed really nice yesterday. You did 25 million shares. That downdraft did have 31 million, but that's the way that, and we're at 177, 174.48 was where the downdraft got created. Meaning, well, it's been down for quite a while, but that's where it took a next leg down. That is really sweet as to how it pushed into it, number one, how it had the volume, it had the price spread. It won't back off. As it does back off slightly today, it has lighter volume. That's what you're looking for in a market that wants to basically go higher. As I said at the beginning of the broadcast, I was listening to CNBC and it was music to my ears. Specifically what it was is you had a fundamental guy talking about gold. You had a technical guy. They were bringing up the Swiss vote. They were bringing up the context that gold has been in a downtrend. They expect that this is the exact place to sell gold. There's no doubt that gold has been in a downtrend. There's no two ways about that. One of the analysts were using a 200-day moving average, and guess what, folks? Okay, moving averages, yeah, they're trending, they're great, but they're made to be broken. That's the bottom line. They're always broken. So we'll see where this shakes out. The aspect that I got out of it more than anything was the fact that it wasn't a bull and the bear on, it was two bears on. That's good in the context of the marketplace, because when you are listening to any financial broadcast, the bottom line is that you can get quite a bit out of that broadcast, but just by listening, on a contrarian type of view, by listening to some of those analysts that are on there. As to the market itself, this morning, it was just incredible, one after the other, that this is a market that's never going to stop, that everything is rosy, that it's the Goldilocks economy, that, on and on and on. And the real question that I would have had for any of those is that, well, if that's the case, why are bonds spiking so dramatically? The bond market, folks, continues to say that, number one, rates are going dramatically lower. Most times, if rates are going dramatically lower and people are pouring into the bond market, what you see, it's a direct correlation that the S&Ps are going to be basically selling off. So we'll see where that whole baby does shake out. There's no doubt that we haven't sold off as bonds have continued to go to higher price. On the 15th, however, where that spike had come in, meaning that I believe that the 30-year that day had moved 5 points. I think it's only $1,200 to do a bond, 42 to 48. So we moved 6 points. Yeah, well, it's 2,100. We moved 6 points. So we moved $6,000 on the contract, and you're putting $2,000 up. It's a monster move. And on a continuous contract, so check this out. This is where this gets really wild. The bond market, I'm going to put this up on a continuous contract right now. And what's happening on a continuous contract is that the bond market wants to get up to 153, but you can make a case that that could be an ABC structure on the way up. Right now the way this is trading is at 153 is where it wants to go. We go to 153, rates are going dramatically lower, and our own S&P, we'll see whether they decide to sell it or not. This is Tom O'Brien, this is TFNN. You stay right there, folks. We'll come right back. Dow is up 11, Nasdaq's up 25, S&Ps are up 3.5. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at That's TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now up 12, Nasdaq's up 27, S&Ps are up 3.5, and you talk about some valuations coming in. So check this out, folks. This is pretty amazing. Uber Technologies, and that's the car ride service, folks. Investors are betting that the 5-year-old car booking app is more valuable than Twitter and Hertz Global Holdings. The startup is close to raising a round of financing that would value it between $35 billion and $40 billion, according to people close to the situation. At this valuation, investors appear to be thinking that when Uber goes public, it might be worth $80 billion to $100 billion. It's pretty amazing. It really is. If, in fact, they complete this round of funding, the valuation, with a valuation of $40 billion, that is going to more than double the 17 billion valuation it had in June. So picture this. You're talking about, what? June, July, August, September, October, November. That's pretty amazing. You'd be talking about, within a matter of 5 months, that the company doubled in valuation. And the way those valuations are figured out, folks, by the way, is this, is that you have the Uber board turn around and say, okay, we think they're growing it at this level. We think this company is worth this much money. Then what ends up happening, they send it into the bankers, the broker-dealer community, and say, okay, can you sell this? They go in it, they sell it. That's what it's worth. Because you got to remember something. These companies don't take in the amount of money to get any type of these valuations. But that's how it gets valued. That's how it got valued in June. In this particular case, right now, that's how it gets valued. They'll just double it up. And, of course, they're going to try to sell it for as much as they can. The bottom line is that that, number one, is a huge disruptive technology. And I do expect we're going to see that around. And this is where a company like Uber is just driving regulators up a wall. What it's also doing, and this is where it's a big number. You know, the medallions in these large cities, that is still a huge business. But boy, I wouldn't want to be sitting on a medallion that you've paid, whether it's $100,000, $400,000, or $1 million for at this particular point, because what you will get is that we will all get used to an Uber deal. You know, I suspect we will, because of the fact that it's the convenience. It's no doubt the convenience of something coming very quickly, and where the fight will come in. This is where the fight will come in. You know, the medallion business in general has always been, you know, a very highly regulated business, because, see, you have someone picking you up, you're getting in a car, you know, the whole ball of wax. What the argument is against that, these are taxi cabs versus just an app, is in fact that, you know, you're getting in someone else's car and all this, and the safety issue. But what you have also simultaneously is that the world of apps and social media, folks, are not only right there. That is the way of the world, period. That's how it is. And there's plenty of folks that know different. And you're going to see that going from industry to industry to industry. And that's just how it's shaken out. Over this weekend, well, actually on this Black Friday, tomorrow, Thanksgiving, what Amazon has pulled off is pretty amazing. What they're going to do, and this is really smart of them, they have a couple different deals that happen simultaneously. They have Thanksgiving deals going on, but then they have a separate Thanksgiving deal going on that if you order from your cell phone, okay, that's the only way you're going to be able to get even a bigger discount. Bottom line, folks, that you're going to see that expansion in shopping go dramatically, and what you are also going to see is a huge surge in the online sales this year. I mean, you can just taste it, you know. And we'll see if, in fact, does Amazon take away from more of the actual retail stores. Once you do, if you haven't done that Prime on Amazon yet, have someone give it to you over the holidays, because what you do get out of it is absolutely amazing. Meaning, the amount of stuff that you can order that shows up 2 days later at your door for $0, the amount of movies that you get, and, you know, yes, Amazon hasn't been able to make any bread, but guess what? They're getting business and they're getting cash flow in an incredible way. There's no two ways about that. As we come into the holiday, what you will see, I suspect, on Friday is another push higher. The volume will be no doubt light, but as I said a little bit earlier, one of the biggest days I've ever seen in the market has been on a Friday after Thanksgiving, and in that particular case, it didn't matter what stock you had bought, that thing just kept running, because that's once you get going, you get it going. And we are at highs, so you could see something like that in a dramatic way. Now, as I said a little bit earlier also, is that when that had happened, what also happened is that on that following Monday, the market got wrecked. I mean, just wrecked. It just, it took it away, took it back in an extraordinary way. We will have markets across the world that are open tomorrow. Tomorrow, the big number is going to be the oil market. I suspect the dollar, you know. But the way that oil is trading right now, it looks to me that bottom line is that oil is going to go a lot lower. And the real game here is going to be, does the Saudis want to basically destroy the price of oil, bring it down dramatically, in order to basically put production much lower? Because if depending on how long you've been in this market, I remember I had an office up in Alaska. And in 1986, folks, the Saudis got in an oil war. And it would remind me of this when I was looking at rig, because I remember trading rig at like $6 and $7. And what had happened is that they got in an oil war, and the Saudis decided to destroy the price of oil, and I think we went down to $10. It was $10.12 or something. It was an amazing number. What also happened there, though, is that they put a huge amount of production out of business that never came back into business for 10 or 12 years because so many people got burnt. The way that the two largest drillers are trading right now, they're not going to go out of business, but when I'm looking at them, I'm saying to myself, man, oh man, something else is going on here, okay? Because Transocean rig want to go a lot lower. And when I start putting that together in the ABC structure and the dollar itself, never mind the fundamentals, it's like, you know what? We have a huge amount of oil. Saudi has the most amount of oil. What are you going to do? Destroy the price of oil. Destroy the production. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Have a great Thanksgiving. Have a safe Thanksgiving, folks. No drinking and driving. We'll see you right back here. Go get him, folks.